Hey, this is Sasha. Thanks for joining me in today's video. And what I want to share with you today are the 6 reasons why option trading is better than just single stock trading. So stay tuned. I'm going to share with you some insights here as we dig deeper. All right, so if you're brand new to the channel, you see that sometimes I'll post things about stock trading simply because people are just getting started into stocks, and then eventually they get into kind of options. And a lot of my content really does center around options trading because that's kind of the next level beyond stock trading. If you're just dealing with stocks, that's fine. That's kind of a good starting point. But some people that will choose to take their education a little bit further, they deal in options. And when you deal with options, there's a lot of benefits to it. Now, the downside, of course, there's always a trade-off. The downside to it is it does require a little bit more education. Now, in today's video, I'm going to share with you some cool insights when it comes to option trading and why it's a lot better than stock trading. So we're really doing this because I'm launching a upgraded version to one of my older courses, Options Mastery version 1.0. So we've reworked the course basically from the ground up and just kind of broke it apart into new videos. Everything was refilmed. And this is a very detailed course. Now, this one's launching November 25th, so there's a lot of great content and things that are coming out in it. And you can get that at our website when you go to tradersfly.com. Right there, you're going to probably see some things that are popping up over here. You can get notified when it's getting released as well. Make sure you get added to the newsletter list. Or you can go to our primary course website, rise2learn.com for there. Now, you'll be taken to this page kind of like this, which we're trying to finish up right now. And we're going to release this course in kind of 3 stages. So November 25th, we've got all these great videos coming out. Then December 2, we're going to get the next batch. And then December 9th, we'll do the final batch of videos. So there's a lot of things we're covering, from the world of options, risk profile pictures, the options chain, how time decay works. I mean, we're going to dig deeper into it. It's about 11 hours long, in-depth study. So quite a bit of knowledge and material. Yes, you could get quite a lot of things from my YouTube videos, but this is all in one spot, start to finish, kind of like watching a really long movie series or show. So anyways, let's get started kind of with reason number 1. And I think the biggest thing that people gravitate towards is the higher potential for returns. This is why a lot of people get into option trading, is because of the return potential. So when we look at kind of a lot of the things that I do in option trading, like when you go in and let's say you're trying to buy a stock, like let's say it's Square right here, and you try to buy, let's say 500 shares, and you could go ahead and analyze the trade. And this picture, by the way, tells you right here, it tells you the stock price and then your profit over here or your loss. So this is kind of the 0 line. So if we buy the stock right here at 0, this is right now 186 or so. So if we buy the stock right there, if it goes down, we lose that much. If it goes up, we make that much. Now, in order to make that happen, you have to go ahead and put up about $93,000. That's a lot of capital. But you can do similar concepts when it comes to option trading. So if you're dealing with options, you can create very similar values, because how does this stock make you money? It's from price appreciation, a delta of 500. So you make $500 for every $1 move up. So take a look. If I move that price slice up $1, you can see you make about 500 because we were down, 60 to start. So that's kind of the way that it really works. And with options, what you can do is you can do a very similar trade strategy and use a lot less capital. So for example, I could go ahead and let's just say, hey, I'll go ahead and buy let's just do a diagonal, why not? And see how that plays out. And I can go ahead and do, it's just a spread that overlaps a couple of strategies together, right? It overlaps buying a call and selling a call. So the net, really, we're selling one and buying one for protection. And what I can do is, turn it and rotate it. And then what I can do is create the same thing with about 500 delta as well. So here we go, about 500 delta. And it's going to cost me a lot less than the stock. I'm going to pay $48,000 on this versus 500 shares. I'm going to pay $93,000. And not to mention, if you're brand new to options, you can also make money here from time decay and volatility as well. So every day, we've got two lines here. The green line is at expiration, white line is today. Every day, you make this theta value, which we'll talk about in just a minute. But that's kind of a cool thing behind it, is that with time, that white line gets closer to the green line and it gets closer to expiration. So anyways, in either case, you can make a lot more money. You have a higher potential for returns when you're trading options than you do stocks, and you can use a lot less capital there as well. So that brings us to point number 2, which I've covered, is that you use less capital to trade the same stock for the same exposure. Now, we've kind of covered that just now, you could say, but here's what I want to show you, is that many people, what they do is they go ahead, they buy a stock right here, right? So you buy a stock and then you want to protect it. What they'll do is they'll go ahead and maybe they'll buy a put at 150. So they'll buy a put and you need 5 shares and you've got a position like this. Well, this is part stock and this is part option. Now, you're using it for protection, but those of you that do this and think about this, you know, and you really understand it, this is actually the same position as, well, why don't I just go ahead and buy a single call? Okay, so why don't I just do that and watch how that works? So let's go here. Actually, let's go to about the 150. Let's go about 5 or 6 contracts. Look at that. I could do the same risk profile picture by just buying the calls rather than dealing with the stock and the puts. And it makes your positions a lot more simple. And you can see the risk profile picture is identical. So why do one versus the other? Well, of course, if you have a stock that pays dividends, maybe you have a lot more capital, maybe you'd move the market, that's one thing. But if you want to be capital efficient, right, it just makes sense. So it's kind of like, boom, right here, you could buy the stock for, you know, what did we say, $98,000, $93,000. Or you could just go ahead and buy the option contracts. Not that I would recommend doing the singles, because most people know and understand that I typically promote more spreads and making money from time value. But in the case, the risk profile picture here is nearly identical, and you're using a lot less capital, about $20,000. So you can have the same type of exposure, a lot less capital for the same kind of exposure, which also means you're using less risk when properly used. So when we look into this, well, I could custom create and concoction, hey, why don't I do kind of 4 or 3 or 2 or 1? That's kind of one way of doing it. With a stock, all you can do is really just add to it or subtract to it. So I could just kind of go like this and it rotates up or down. Now, with an option, let me just show you here what we can do. Let's just go in and buy again, we'll just do a diagonal for now. Or actually, let's do a butterfly so you can see a little bit of a difference. Here's buy a butterfly. It's just another name for a multi-leg spread. Okay, so here, when I look at a butterfly, and let's say, bump up to 10 contracts, and now I've got this butterfly, I'll widen it out a little bit. So what you can see here, if I've got this butterfly, what I can do is, look, I could position this butterfly right at the middle, so that way I make money from time decay right here, so that every day that white line gets kind of closer and closer. Now you might say, well, stocks move. Okay, fine. Well, in that case, what I can do is position it a little bit more bullish. So let's just go, you know, a little bit further over here. Let's go a little further. 240, 220, and there we go. So I could do something a little more bullish like this. So now it has to move. That could be a little bullish direction. I could do it more neutral like this, and I could even widen it out. Okay, so I could have more width on the spread. And another thing is, let's just say I want to be somewhat in the middle, but slightly bullish. What I could do is just kind of rotate it a little bit more like this. So you could do quite a lot of things with it. You know, or if you want to drop the other leg, let's say, you can bring this leg in. Let's see if there we go, something like that. You could do it this way. And with time, what you'll notice is that white line will creep up right here. So even if you go outside this expiration range, you're still fine. So you can do quite a lot of strategies and be very creative, which means you can use a lot less risk. Now, the other thing that I've mentioned is that you can make money from time decay. So a lot of people don't get this because it's kind of like selling insurance premium. So if you understand the car concept, where you are typically buying insurance, and when you buy insurance, you're paying the insurance company money every single month. Well, in this case, we are the insurance seller, and we collect that premium because people are insuring their stock. So as I mentioned earlier, so let's say we go ahead and have this. Here is our money that we're making, $30 a day from this. So watch what's going to happen is if I zoom in on this, and let's say we just move this time forward. Right now I'm down $4 from a starting position, but let's say tomorrow, boom, even if the stock doesn't move, you're up about 30. Then again, the next day, you move that, and then you're up another 30, and that continues to accelerate. So as you keep moving a few days in, it doesn't really matter that you're in the middle. You could be kind of somewhere to the right, to the left. You're still collecting premium because things decay with time, just like a fruit, like a banana, peach, apple, they decay and expire with time, and different types of fruit decay faster than others. So you could do shorter duration, longer duration. It's really just a matter of perspective. So that's kind of another huge benefit to option trading, is that you can make money from time decay. Now, what you can also do is have better risk management. So when you look at this, there's just so many things that you can do when it comes to risk management with options. So let's say, for example, something's going against you. Let me see a position that might be going against me. Let's say, let me see if I can find one here, like maybe a Microsoft. Let's see, did I put gold? I put gold on a while back. Okay, so let's say I have this position, let's see, that one or this one on gold. Okay, so I've got this position on gold, and if it's starting to go against you, what can you do? Well, of course you could reduce contract sizes, just like stock sizes, but what you could do is you could go ahead and construct another spread on this side. So right now this is a very bullish strategy, but what I could do is, let's go to December 18th here. And right now I'm doing a kind of a vertical there. Well, what I could, or sorry, a diagonal. Well, I could buy a diagonal on this side as well. So what I can do is do kind of like a bearish diagonal. So let's do about 20 contracts here. I will tighten it up to, let's say, 185, maybe 190-ish. Sorry, 185 on this one. And 190 over here. So now we're getting somewhere, and I'll bring it in a little bit tighter. And now I've got this spread constructed and combining it with this spread. So now take a look. I'm going like this, and let's say this stock starts to tank. My delta is 185. That means I lose $185 as this pulls back. Well, what I can do is put another diagonal, and now I'm negative 67. So I could even neutralize it to where, hey, all of a sudden, I don't care if that stock goes up or down a bit. I've got some room and range. So I could basically flatten out that curve a little bit more where I'm not as directional. Now, what's the caveat or the issue here? Well, if it just starts to continue going against one side a little too quick, that could be a little bit of an issue. But the point is you could tweak these different things in different strategies. Let's say I started with something like this. Well, if this stock starts to tank and go down, what else can I do? Well, let's say all of a sudden I say, hey, it's tanking and I'm going on vacation. Well, what can I do? I could buy a few single contracts here. Sorry, analyze opposite order right here. And what I can do is just go ahead and get some puts, and that can now flatten my curve on the downside. So you can see the flexibility of it is just fantastic. And that's really the power behind it. So you can manage the risk, and it creates very flexible strategies that you could set up and create. So really the sky's the limit, as you saw, that I could go ahead and create these kinds of strategies. Of course, there's always trade-offs to doing, these creative strategies, because by adding this extra put protection, I reduce my theta, or the amount of money I'll make on a per day basis, from 70 to about 55 per day. But the point is that if you need it and you have a pricing problem, you could take a hit on the time value that you'd be making and at least slow down the pricing problem that you have. So there's a lot of flexibility there. So anyways, those are some of the big things to, where option trading just is way, way more powerful. There's many more things and examples I could show you, but that's kind of a starting point, is that really this is how money is made, is from time value, time decay. Insurance companies, that's how they make money, is from your time decaying. Life insurance premiums, you name it. A lot of those things work off of time, and that's how they make the big bucks. And this is the way that some of the big traders make a lot of money, is through time premium, through these derivatives. So anyways, the reason we're discussing this is because of this course. So definitely get on our newsletter list. If you're not on it already, you can also click some of the links in the description. This course is jam-packed with a lot of stuff. I mean, I'd highly recommend you check it out. And we're going to do a discount as well for those of you that are in the newsletter list. So make sure that you get on the newsletter list so you get that kind of coupon for the Black Friday sale. You know, we don't do discounts often. Usually I just do it during new course launches and that kind of thing, and that's about it. So November 25th, we're starting it out. We've got a lot of things to cover, from how options are valued, where they get their price, examples in the money, out of the money, you know, basics of the platform, option chain screen, what side of the trade do you want to be on, how time decay works. There's just so much stuff with so many different examples in there, and a lot of topics to cover. So if you want one spot, get a lot of knowledge jam-packed, this will give you a really good foundation to trading options. If you're brand new to trading options, if you don't know how options are traded, if you're just trying to get your feet wet but you're not sure about getting into options, this will help you kind of understand them at least, even if you decide not to continue to learn further beyond that. Again, this is just a core foundation which is really necessary to be able to learn to do any kind of spreads in the future. So anyways, check that out. Links in the description. Get on our website, newsletter list, get there. Or of course, you could always just hop on over to the website November 25th and purchase the course from there. Anyways, thank you so much for watching. Hope you enjoyed this video. Feel free to subscribe to the YouTube channel, check out some more awesome videos on this side, and get some freebies and PDFs as well. So I hope you enjoyed this video. Remember, do what you love, contribute to other people, but most importantly, live life abundantly. I'll see you next time in the next video.